All right, so we want to welcome you all to our webinar workshop this beautiful Friday morning. We appreciate you spending just a small part of your day with us. My name is Brian Griffin, a marketing assistant here at Messer Financial Group. Now, many of you are already familiar with Messer Financial, but in case you do not know, we are an agent focused FMO located in beautiful Mint Hill, North Carolina. We started with only 2 agents, and now we are serving thousands of agents across 40 states, and we are still growing. So today, Ken Smith is back, and he is going to teach us about the importance of needs analysis when selling life insurance. So there's nothing more important during the sales process than having a clear understanding of the needs of your clients. A thorough needs analysis is going to paint the clearest picture of not only what your client wants, but also what your client needs. It's going to uncover their exposure, and it's going to do it in real time right in front of them. So if you are not familiar with Ken Smith, he is the best-selling author of Sales Lessons from the Masters. He's a national sales trainer for Messer Financial Group, and he has over 40 years experience in the insurance industry. So he's seen just about everything. So before we do get started, I want to go over the housekeeping rules. So we're actually going to hold questions, but not just until the end. So if you do have questions, make sure that you type them in the box. And periodically throughout the presentation, Ken is going to address your questions. But once again, you want to make sure you type your questions in the box on the right-hand side of your screen, and we will make sure that we do get them addressed. So now, without any further delay, Mr. Ken Smith.
Thanks, Brian. I want to mention that I really appreciate everyone being here this morning, and I really want to make it worth your while for taking the time to be here. Um, as I was getting ready for this session, um, I was actually thinking about a video that I watched earlier this week, and the video was from a guy I had met one time. He's long since passed away, but he was talking about when he started in the insurance business a long time ago. And when he started the training, part of the training was they said, here's a presentation, learn the presentation word for word. At the end of training, you're going to have to give it to the other agents in the office. The last day of training, he gave one of the agents the presentation word for word. And the other agents that were watching, a couple other agents that were watching it came up and said to him that if you deliver that presentation like that to your prospects, you will be successful in this business. But Mort, his name was Mort, and Mort left there thinking, if you think I'm going to give that presentation to my friends, you're crazy. He said, I'm going to use my own words. And what happened was the first week he did okay, but then the second, third, and fourth week, he didn't sell anything. The top agent for the company was in his office, and he saw Mort and he said, what happened? And Mort said, no one wants to buy. The top agent said, here's what I'll do for you. You make 5 appointments next Tuesday, and I'll do all the selling, and I'll give you all the commission. And Mort was all excited about that. He said, hey, I'm really going to learn from this guy. So they get to the first appointment, and Mort started giving the sales presentation word for word. Or the top sales guy started giving the sales presentation word for word. And he sold all 5 prospects that day. Mort said, from that day on, he never made another presentation that wasn't organized. And he said at that moment, when he understood that, selling lost all fear for him. So here's the expectations with what we want to accomplish. Brian already mentioned about how we're going to handle the questions, and I have stopping points. And if you have any questions, please do not hesitate to put them in the chat feature. The second thing is we're going to look at a sales process, and that's the needs analysis. And then my last question at the end, I really want you to think about as we're going through this. Is this something that you can implement and use? And I want you to be prepared to answer that question at the end. My objective this morning is really simple. What I want to do is give you a sales process that will help you sell more life insurance. There's three things I think that it takes to succeed as a salesperson. The first one is an understanding of the fundamentals of principles of sales. The second is know the precise steps for every sale. And the needs analysis incorporates both of those. But here's the last one, the desire to succeed. And I look at that as if you take the first two and apply it, you have the desire to succeed. And the question I want you to ask yourself as we're going through this is, can you take this process and implement it and execute it? Last weekend, I was reading a book about Ray Kroc and McDonald's. I've been kind of a student of the early days of McDonald's. I've written a couple articles on it. And one of the things that really stands out about McDonald's to me is if you look at those early days, um, they went years without having a franchise or store fail, and there was no other franchisor that could make that claim. And I look at it and I ask myself the question, what did McDonald's do that the other franchisors didn't do? And McDonald's had a process and a step-by-step way to approach everything in the store. They had it down to a science with what works. And that's what makes a difference. Here's the other thing that I really found interesting. There was a management consulting firm a few years back that did a survey of salespeople across all industries. This isn't just the insurance industry, but I think it really holds true. 36% of the salespeople have no sales process. 42% have a sales process, but they don't follow it. So stop and think about this. 78% of salespeople do not have or use a sales process. And if you think about it, in this business, 20% of the salespeople do 80% of the business. So my question to you is, which group do you want to be part of? The 80% that does the 20% of the business, or the 20% that does 80% of the business? The question I always ask in a lot of sales presentations is, how would you like 133% sales increase over a 10-month period? This actually happened with one of my consulting clients. And guess what? There's only two things we did. Number one is they started using the sales process, the needs analysis that we're talking about today. And then the other thing was we worked on attitude with them. And their sales increased, 133%. You know, the question, let's see, a couple of years ago, I did several state meetings for the Independent Agents Associations. And that's basically the property and casualty agencies. And one of the questions I asked at every meeting was, what would you do if someone calls and tells you they want $250,000 of life insurance? And everyone would always say, we'll just give them a quote for $250,000 of life insurance. And the question I asked them to get them thinking about what they were doing was, how do you know that person needs $250,000 worth of life insurance? And I said, if they just want to buy $250,000 of life insurance, basically they can go online and do it. They really don't need you. Where do you provide the value for your clients? You know, so why should you use a needs analysis with your clients? Number one is it establishes you as a professional. Number two, it establishes the value of life insurance. Number three, and I think this is so important, it provides a clear understanding of the exact reason the life insurance was purchased. And think about this. If I buy a $250,000 policy and, just buy it and the 250,000 is just a pot of money. I mean, that's pretty meaningless. But if I buy a $250,000 policy and I know it's going to take care of my mortgage, my debt, my final expenses, and provide some income for the family to adjust after I'm gone. That policy, that 250,000, when there's specific things that are attached to it, really becomes much more valuable than a $250,000 pot of money. And here's one of the things that really makes a difference is using the needs analysis, your closing rate will increase and your sales will be larger. So opening the discussion. I mean, again, I don't sell anything. All I do is ask questions to help my prospects see that there's a problem, and then I provide solutions for it. And one of the easiest ways to open a discussion to lead into the needs analysis is experts recommend that you review your life insurance every 3 years. When was the last time you had your life insurance reviewed? And one of the other questions I'll ask as a follow-up, how much life insurance do you own? And one of the interesting things is you will be surprised at how many people have no idea how much life insurance they own, or in a lot of cases, they'll think they own more than they actually do. And then my third question is, how did you determine that amount of life insurance? And then the last question is, would you have any objection to me reviewing your life insurance? So the needs analysis is really simple. I want to show you what it looks like. But here's what the needs analysis looks like. Basically, page one is you're going through with the prospect, asking about their needs for specific items, and then going through the calculation. And then on page two is your options. So as you can see, it's simple. It's 2 pages, and we'll work through the process with how it works. So it's 2 pages, and the presentation is really simple. And here's my opening with the presentation. Most families that I work with want to make sure that mortgage, debt, final expenses, college or trade school are taken care of. Plus, they like to see several years of income for the survivors. Would you want the same if anything happened to you? Now, so you're right into the needs analysis, and the first item on the needs analysis is mortgage and other debt. And I'm going to ask, what's your mortgage? Would you want to pay off the mortgage completely or take care of several years worth of payments? And then after that, I'm going to ask, do you have any outstanding debt, such as car loans, credit cards, anything like that? And I'm going to take that amount, I'm going to put it in item one. And then number two is funeral and other final expenses. Funeral and other final expenses, typically the funeral and other final expenses range between $10,000 and $25,000. Do you think 15 or 20,000 would take care of your funeral and final expenses? Then I'm going to take that number and put it in. And then third item is income to be replaced. What this does is it helps your family adjust to your loss of income and helps them maintain their lifestyle. If anything happened to you, would you want to provide your loved ones with several years of income? This would provide income for the necessities such as food and clothing. And what we usually do is assume 5 years of income. Would that work for you? And if they say, no, nah, they only need 3 years of income, what I'm going to do is take whatever years they want to cover and say, Mr. Prospect, what's your approximate income? And and I'm going to put the number, multiply it by the number of years, and put it in there. And then education, um, you know, would you want to make sure that if anything happened to you, there was money for your children to attend college or trade school? How many children do you have? Currently, the average cost for a year of college, including room and board, is approximately $19,000. Average total cost for 2 years of trade school are $33,000. We're all concerned about providing a good education for our children, aren't we? What are your thoughts on your child's education? And then what I'm going to do is come up with a number. If they have one child and they want to do $20,000 a year for college, I'm going to take that 4 times 20 and put $80,000 in there for it. So you got the needs analysis completed, and then I'm going to show you what it looks like when it's completed. This is what it looks like when it's completed. Mortgage and other debt, I've got 250,000. Funeral and other final expenses, 15,000. Income to replace making 50,000 a year for 3 years is 150,000. Education, we've got 40,000 put aside. So the total amount of life insurance needed is 455,000. This individual owns currently 195,000. So what we've determined to be the need is 260,000. And notice here's it says monthly amount to set aside. So I'm going to explain that in a minute. Okay, so you have it completed. And here's the thing with the premium commitment. Notice I had that money set aside. One of the things I am going to do is ask the question, when I get to that 260,000, how much would you be able to set aside each month to take care of those needs? So what I'm doing is getting a premium commitment before I start to go into the solution. And one of the things that I always do is if they hesitate to come up with a premium commitment, is I'm going to ask how much they spend approximately every day on snacks, pop, coffee, and I'm going to multiply that by 31. And the reason I do that is I want to keep the premium, within something that seems reasonable. So, I'm going to say if I come up with a premium, I'm going to say, hey, that's what you spend on. That's less than what you spend on lunch or coffee or whatever each day. So that really works. And then here's the thing: if they're struggling with it, I will throw out a couple numbers and give them a choice and say, okay, would 250 or $200 work? So they've got a yes choice with it. But the premium commitment is so important because what it does is it takes away the objection later on that I can't afford it. So at this point, Brian, if we have any questions.
Well, absolutely. So the number one question is, can we get a copy of the needs analysis?
Yes, the answer to that is yes. And if you
Yes.
will email me, and I'll give you my email when this is all over, I'll be more than happy to send you a copy of the needs analysis and the script that goes along with it.
There we go. So you just answered Raul's question because he was asking about the script. So yeah, so all of the questions were basically the same. Everyone wants a copy of the of the needs analysis and in the in script. So, and can you say that again? You said so. Basically, they can just email you the
Right.
request.
And it's ksmith@messerfinancial.com. And I will send you a copy of the script that goes along with it. That's the questions. And then I'll send you a copy of the needs analysis itself.
Awesome. That's all we have for now.
Okay, great. And then we're into page 2 of the needs analysis. And what it is based on your family's need of, in our case, 260,000. We have three options. And we're dealing with a male age 40, non-tobacco, $260,000 of life insurance, and he's committed to $125 a month in premium. And first option is going to be $260,000 of whole life. And in this example, I will tell you I'm using a Surety's participating whole life plan. And here's what I'm going to say is here's the advantages of whole life. It builds cash value. The rates never change. It pays dividends. Benefits never decrease. And it is permanent protection. And then I'm going to talk about, again, this is option A, all whole life. Whole life is permanent protection. It builds cash values. And whole life is similar to buying a home versus renting. With whole life, you're building equity. Term insurance is like renting. The cost is less, but you never build equity. And I'm going to say one of the things that I really love about whole life is the fact that while you have the policy, one of four things is going to happen to you. You're going to live, die, quit, or become disabled. If you live and retire at age 65, you're going to have $106,000 in cash value. At that point, if you stop paying premiums, you'll have a paid up policy for $220,000. If you die, your family's going to receive a check for $260,000, and if there's dividends built up, they'll be paid in addition to that. If you quit before you're age 65, you receive the cash value. And then one of the things I do that few people do today is I add the waiver of premium. And I'm going to say if you become disabled after 6 months, the insurance companies will pay your premiums for as long as you remain disabled. And the cost for this plan is $352 a month, or about $11 a day. And I'll go into in a minute why I break it down. You notice the daily cost basis. I'll show you, talk to you about the reason I do that in a minute. And option B is basically all term insurance. The benefit of term insurance is you have a lower monthly premium and it provides larger protection during the family growth years. So with option B, $260,000 of 20-year term insurance. The premiums are level for 20 years. At the end of 20 years, it can be continued with a higher premium. But you also have the option, if you go the term insurance route, to convert parts of it or all of it to whole life along the way. If you're disabled, just like with whole life, the insurance company will pay the premiums. And the monthly premium amount is $49.52, or about $1.60 a day. So the cost for this is less than a cup of coffee a day. And then option C is the Smart Choice Family Protection Plan. What it does is it combines the permanent protection of A, whole life, with the lower initial cost of Plan B. And it protects the family's income during the growing years while providing permanent protection for the retirement and survivor spouse. So, and what I'm doing with option C is it's a combination of whole life and 20-year term. So in this case, we've got 50,000 of whole life and 200 a rider with for 210,000 of 20-year term. And then I'm going to show them that at age 65, the whole life will provide 20,377 in cash value. And if you want to stop paying premiums at that point, you can have a paid up policy for 42,000. And the combination for this is approximately 120 a month or $3.87 a day. And that's a lot less than you would spend for lunch at McDonald's. So with the combination plan using whole life and term, I came up with a program that solves this problem for the need for $260,000 worth of life insurance. And notice the premium commitment, he committed to $125 a month. I'm actually under that. But one of the things that I learned a long time ago was with the premium is break it down into a daily cost basis, because that way it doesn't perceive, it's the perception is it's not as great. And I can always say, like in this case, $3.87 a day. That's less than what you spend on lunch at McDonald's. So it makes the perception of the premium a lot less. And then after I laid out all three options, I'm going to ask the question, which option fits best with your current financial situation? And let me pull up the completed page 2 so you can see what it looks like. And this is what the completed page looks like. You can see how the options are laid out. And you can see option A with all whole life, option B with all term, and then option C, the Smart Family Protection Plan, breaks out like that. So it's really very simple. It's really very simple. It really works well. So Brian, if we have any questions at this point in time, or if you have a
Yeah,
question, just go into the chat feature and send Brian your question.
we have a bunch of questions. So let's see. The first question is there a script for permanent insurance?
Yes, and actually what I included in it's what's in the script is talks about exactly what I've done with in this presentation. And I can talk
Okay.
you through it if you have any questions. You get the script, and you have any questions and you want to talk through it. More than happy to visit with you about
Okay. And Richard asks, what do you do when the client says they still want to think about it?
it. The question is, why do you want to think about it? And I can give you, Richard, if you'll email me, I've got a great answer to that objection, and that's where I go into what do you hope to learn by thinking about it. And if you email
Right.
me and ask me for it, I will send you. It's a great response to that objection.
Excellent. And Michael says, can Ken come with me on my next 5 sales calls?
I wish I could. I love it.
All right, so let's see here. Oh, we got a bunch of questions here. Do you have a presentation for the senior market or final expense?
Yes, I do. And in fact, two things. If you'll email me, I'll send you the final expense. And we had a great webinar a week ago Friday. And if you'll go out to the Messer Learning section on the website, there's a replay. You can listen to the replay of our final expense presentation.
Awesome. So, and Eileen says, is there underwriting if a client converts from term to whole life?
Eileen, that is a tremendous question. And you asked something I forgot to mention. Is the good news is with converting from term to whole life, it's guaranteed. You don't need any evidence of insurability. And so if I have a $100,000 policy, term policy, and my client's in horrible condition, um, we can convert that and all I have to do is just sign my name on a piece of paper.
Awesome. Awesome. And then also, this says, I'm newer to to selling life insurance. I'm also wondering, is option C then selling the client two different policies, or is this a hybrid product?
Essentially, what I'm using in that case, it's all one policy, but with whole life, with a lot of the carriers, you can take a whole life policy and add a term rider to it so that it all becomes one policy. Do we have any other questions?
Y- yes. So we do have another question here. It says, when asking first questions listed in the analysis form, how soon do you come up with the end figure, or how do you come up with those figures right on the spot? And this is also coming from a new agent in life insurance.
Okay, basically with I will sit there and the whole life is really simple to run an illustration for the the terms simple to run an illustration for, and then for the third one you have to play around with it a little bit to come up with the premium. And what you'll find is that the more you do it, the easier it becomes. And that's part of the reason it's a lot simpler if you're using, one of the things I always say is start out with picking one carrier. Don't sit there and compare 85 carriers. Pick one carrier that you're comfortable with, that has a good product, and basically just play a little bit with the term and permanent combination. It's not really that hard to do. It just takes a little bit of practice.
Absolutely. And then also, can you just repeat your email address and contact information again? We have a few people asking for that again.
Sure, it's KSMITH at messerfinancial.com.
Awesome. Thank you. And that's it for the questions for now, Ken.
Okay, great. So we got the questions. One of the things I want to talk about is the law of averages. Here's the thing. If you follow a script and you make a certain number of calls, you're going to get a certain number of appointments as a result of that. And then you'll get a certain number of sales. Um, one of I was talking about the law of averages with one group, and I had a guy call me and that I was working with, and he was so excited. He was so excited, and he had watched the movie In Pursuit of Happiness, which is the Chris Gardner story. And he said the movie said exactly what you said, Ken. Said you make X number of calls, that means you're going to get X number of appointments, and as a result of that, you're going to get X number of sales. About 6 years ago, I did a lot of work with the Blue Cross agents up in Michigan. And one of the things that after a few months of them going back to their underage 65 health clients is we got to a point where, excuse me, for every 15 calls where they asked, would you have any objection to me reviewing your life insurance? They were getting 7 people say yes. And as a result of that, they were getting 4 sales. Now, I want you to think about this. Their average sale would generate about $600 in annualized commissions. So if they made 4 sales, 4 times 600 is 2,400. So for every 15 calls they made, they were generating $2,600 or $2,400 in commission. That meant that every time they picked up the phone to make a call, whether the person said yes or no, it was worth $160 to them. Even with the law of averages, is if you make 10 calls on existing clients and you make 1 sale, every time you pick up the phone and for all those no's, that no is still worth $60 to you. So the law of averages if you stop and think about it, really works in your favor. And one of the things that I found valuable is, again, with very few agents in this business do this, but if you can measure, and determine the law of averages for yourself, and you know that every call is worth $100 to you, those times when you're out there and you say, I don't want to make any more calls, and then you think about, hey, whether I get a yes or no, it's worth $100 to me. It's a real good motivator. The bottom line is every no gets you closer to a yes, but you've got to ask the question. And one of my favorites is if you look at the home run leaders, Barry Bonds, Hank Aaron, Babe Ruth. Here's the interesting thing that I found for them is that for every home run, they struck out twice, if you look at the law of averages. But they knew that, if I got two strikeouts, then I'm due for a home run. The needs analysis does work. And the only way it won't work is if you don't follow it, or you don't use it, or you don't follow the instructions with it. So here's my next steps for you. If you really want to implement this, I'm going to suggest that the webinar will be out on the Messer Learning Center website. Re-listen to it. Number two is go through the script and email me, and I will send you a copy of the script. Number three is practice the presentation. Find a friend, your spouse, your kids. And one of the things that with practicing is this can really be so important. I always use the example in sales lessons from the masters. Ben Feldman was the greatest life insurance salesman ever. But when he came up with a new program or started something new, he practiced a presentation on his staff, his wife, and his sons. And I mean, think about this. There's a reason he was the greatest life insurance salesman ever, and that's part of because he practiced. Fourth is don't worry about looking at the products with 85 companies. Pick one company, get comfortable with their whole life and term or their universal life and term. Get comfortable with it and understand it and focus on that company. Next is put together a list of clients who, you can pick up the phone and say, hey, would you have any objection to me reviewing your life insurance? And then the last one, most important, is you got to make the calls. It's really pretty simple when you break it down into a step-by-step process. So here's my question for you, and I'm going to ask you to use the chat feature for this. What obstacles do you see to implementing the needs analysis for you, and are you ready to implement? So put it in the chat feature.
Donna says me. Joel says obstacle, pandemic. Miguel says none and yes. Scott says me and yes. Shandira says she's ready. Jacqueline says if the focus is on seniors, they just want final expenses taken care of.
Perfect. And like I said, go to Master Learning. If you're in the senior market and you have clients, I would look at that presentation and email me, and I'll get you a script for that. That's really easy to implement. One of the things that, and one of my purposes behind all this is if you have clients, guess what? Those are the best, and you're not going back and working them. Those are the best leads that you'll ever have, and those are free. And as I talked
Awesome.
about, and I talked about in the final expense presentation, is one of the things that happens with clients is the more products that you have in a client's house, the less chance there is of another agent coming in and taking that client away from you. Do we have any other comments or questions?
Yeah, we do have some questions that I wanted to get to.
And
Actually,
I have my contact information up on the screen. Don't hesitate to call me or email me.
Jacqueline says, considering most of our sales are now done remotely, especially someone wanting final expense, how do you get them past the I'm not comfortable with a computer?
Well, you can actually, okay, if you're talking about final expense, the final expense is really easy to lay out. And all I do and that's almost a separate. Jacqueline, if you want to talk about that, send me an email and we'll set up a time to talk because I can talk you through that a lot easier on a one-on-one basis. But
Okay,
that can be overcome fairly easily.
awesome. And Michael says, and he says that he can sell final expense, but persistency is a problem. Do you have any suggestions for him?
If you will, if you if you'll take a look at my presentation on final expense, um, it really it kind of cements the whole process. One of the things that really helps is with persistency. Two things: if you're calling on existing clients, number one, and then number two is a lot of times it's your presentation and the amount of the premium commitment that you get. Because with the final expense, what I do is kind of work backwards with getting a good premium commitment and before I even talk about amounts of final expense.
And as I'm going through some of these, Ken, we might want to think about doing an objections webinar.
I was just Brian, I was just thinking exactly the same thing.
Yes.
I'm wondering if we should schedule one for next Friday with handling objections.
Yeah, we may need to do that because that's what a lot of these questions are about, is really handling objections. So I think that that's something we may need to focus on. So I appreciate everyone and your questions, and we want to make sure that we set aside a separate time to definitely drill down on those. One more question here, and it says, with COVID-19, are there any script modifications for phone appointments?
No, no, have not made any adjustments. I mean, the only thing is you're going to have to ask with some of the carriers today, you're going to have to ask the questions related to the symptoms. But no, there's no modifications.
Yeah. And we also have, and one of the other things that I'm seeing here, Ken, is we have a lot of folks that are primarily Medicare that are just transitioning or thinking about just they're wanting to start selling some life insurance. So this is really perfect for a lot of folks.
With,
But yep, go ahead.
two things we can think about because I mean this is great. One is handling objections. I think that would be a valuable one to as a follow-up webinar. And the other one is we may want to reconsider doing the final expense one again with this group because a lot of the questions that we've gotten, and my perception is there's still a lot of questions about how do you sell final expense to your existing clients.
Right, right. And I mean, and with a lot of the folks that are doing Medicare, I would say that final expense probably falls more in that same demographic. And that's why we're probably a lot of folks are leaning more towards that. A couple more questions here. If a client is unwilling to talk with me about life insurance, what would you say to get him to talk with me about disability coverage? That's a different one.
um, two questions I would ask. If you're sick or hurt and can't work, how would you pay your bills? And see what kind of response you get. And then my follow-up question is, does that concern you?
Awesome. That's get some thinking.
Right.
And Donna just made a comment. She said, "Great presentation, helped me a lot. It's getting me out of my comfort zone of just Med Advantage."
Perfect.
Very good.
Okay, let me close. Let me close. I want to wrap it up with a story of two twin 6-year-old boys. It was one where these parents had 6-year-old twin boys who were exact opposites. One was an incredible optimist. The other was the world's worst pessimist. He hated everything and everybody. The parents were really disturbed because of the extremes with the kids. And so they went to a child psychologist and said, "Hey, we don't know what to do." Psychologist said, "No problem. I have tests for kids like that." So they took the extreme pessimist to a room that was filled with toys and all kinds of good stuff and said, "We'll be back in a minute." They took the optimist to a room, and in the room there was nothing but a pile of horse manure in the middle of the room. And they said, "Wait here, we'll be back in a few minutes." They went back to the pessimist kid, and he's just sitting there with his arms folded on the floor. And they said, "Well, why didn't you try the bike or the scooter?" And he said, "Well, I'm afraid that I'll fall and hurt myself." And they said, "Well, hey, there's some great candy over there on the table. How come you didn't try that?" And he said, "Well, I don't want to get a stomach ache." So they left and went back to check on the optimist, and they walked into the room, and there was horse manure all over the ceiling, on the walls, the kids digging, and it's just all over the place. And they asked the kid, "What are you doing?" And the kid said, "With all this manure, there's got to be a pony somewhere. In this business, you know, we have to wade through a lot of horse manure. But one of the things I want you to remember as we're getting through this today is that the bigger the pile, the bigger the pony." So as you head into this weekend and this Friday, I really want you to keep a positive mental attitude and remember that there's a lot of ponies out there, and you keep wading through it, we're going to find a lot of those ponies. So with that, Brian,
I love it. I love it. I love there's got to be a pony somewhere in here. That's good. I like it. All right. So everyone, thank you so much for taking time out of your day to join us. Hopefully these nuggets that we plant each sometimes each day or several times throughout the week, hopefully this is something that you're putting into the ground and allowing it to grow for you. Um, Ken, I appreciate your time and you sharing your expertise today. And anyone out here, if you are not currently contracted with Messer, definitely give us a call. Ken gave his information. If you're interested in getting the scripts and the needs analysis, make sure that you email him at ksmith@messerfinancial.com. And Ken has actually he's gracious enough to definitely walk you through some of these different processes. So definitely take advantage of that. Um, we have these webinars weekly, sometimes daily, these webinar workshops. So make sure that you do check out our events calendar so you can see exactly when they are. And then these webinars are also going to be posted in our learning center at messerfinancial.com. Make sure that you go in and you go back and you listen to some of these because there's some great information just like Ken shared with us. But with that being said, I want to thank once again all of you for joining us this morning. Please take care of yourselves and take care of everyone around you. All of you have a great day.